You're watching Dukascopy TV. I'm Elaine Stenson. As Spain emerges from the recession, some critics are urging caution. Joining me on the line now to discuss this is Vladimir Vano, Chief Analyst at Sberbank Europe. Vladimir, some economists are saying that Spain is not only emerging from the recession, but it has used the harsh years of the downturn to make the economy more competitive, less dependent on real estate and more reliant on high-value exports. Is this view overly optimistic?
First of all, the story of Spain is sweet and sour. It has been sweet over the past year for financial investors. We had seen the sovereign spreads of Spain going down from over 600 basis points in summer of last year down to current 200 basis points to lowest levels since the first half of 2010. Likewise, in the Spain stock market, we had seen over 60% return compared to the bottom from summer 2012. So there has been money to be made in Spain, and eventually, increasingly, the growing number of indicators suggest that the forecast of Spanish economy turning the corner in the second half of 2015 starts to materialize, and indeed there is a hope for positive growth in the next year, slight positive growth, which needs to be read in conjunction with the fact that Spain has gone through two recessions over the past 5 years, and if it was not for the very brief positive blip in the GDP growth in 2011, we would have been speaking about a 5-year record recession. So one has to read the forecast for the first very slight positive growth in 2014 as a signal of stabilization. And as far as the second part of your question is concerned, well, many of the critics of the common currency of the euro say that, especially these hardly better countries, such as the peripheral economies, including Spain, would have been better off if they had their own currency and could devalue this. This, of course, not true. We have seen before the introduction of euro, many of the countries going through the devaluation exercise, which brought nothing but increased inflation and no real improvement in competitiveness. On the other hand, what we have seen in Spain over the past 5 years was that despite having a common currency, the Spanish economy went through what economists call internal devaluation, notably decline in the unit labor costs, which have been declining ever since. The real unit labor costs have been in decline ever since 2010. Compared with 2010, the average real wages are estimated to be down by over 5%, which is this instrument or tool that could help to improve competitiveness of the Spanish economy. When we look at the forecast for the next year, it's really chiefly based or driven by the improvement in net exports, by improvement in the competitiveness of the Spanish export industry. When you want to boil it down to very particular examples, this improvement in competitiveness can be demonstrated, for example, by major German car manufacturer shifting part of its production from Central Europe back to its Spanish factories. So yes, indeed, Spain has used this rough period to improve its competitiveness through internal devaluation, especially the decline in the unit labor costs and average wages as such.
Analysts at New York-based global credit rating and research group Moody's have agreed that Spain is emerging from the recession. However, they've warned that the recovery will be weak. What's Spain's biggest challenge facing recovery at the moment?
The enormous backlog of the people without jobs. Despite this, what I call stabilization after the 5 rough years, the unemployment rate is still expected to creep slightly higher above the 26%, which is an enormous figure. Even this stabilization of the real economy does not really guarantee the more intensive job creation.
Most of the Eurozone countries have emerged from recession. How big of a boost is this for Spain?
The Spanish general government debt is set to exceed 100% of GDP, with the fiscal deficit still at unsustainably high, over 6% of GDP. The government consumption will not be a contributor, positive contribution to the growth. Likewise, with over 1 in 4 Spaniards without jobs, the household consumption is not a positive growth driver, and the base scenario assumes just the stabilization of investment. In other words, if it was not for the improvement in net exports, Spain would not be able to emerge from the recession. So the recovery, given the structure of the Spanish exports, the recovery in the Eurozone is the key driver. Is instrumental in Spain.
And finally, do you see a broader recovery still many years away?
We do see an increasing number of the green shots throughout the Eurozone. The most importantly, coming from the Germany, which has used the past few years to significantly improve its competitiveness in terms of the global export, which is very important because Germany is a locomotive of the Eurozone economy and key export partner for many of the economies throughout the European Union. So we do see recovery of growth, but this growth story is a sweet and sour because it will not be associated with such a significant increase in employment as everybody would wish for. And moreover, speaking about the recovery, one has to keep in mind what we have been through. In the case of Spain, after the past 5 years of, except for 2011, after the 4 out of 5 years of economic decline, it would take, in ideal scenario, at least 5 years for Spanish economic output to get back to the levels where it was in 2008. So we are very slowly crawling out of this.
Vladimir, thank you for that, and thank you for joining me on the line today. And that's all we have time for now, but do check back for more updates and interviews throughout the day. Bye for now.